Now we are going to see how fusion procurement works we have got a few functionality in fusion where we can have centralized shared services or decentralized model. It is not available in R12 or older version of Oracle 11.9. So let us see one by one how these options works in fusion. Probably you would have heard about requisition business unit versus procurement business unit. So we are going to see one by one what it is and how it works. The fusion, the latest functionality in the fusion is we can have a central procurement activities, we can have a decentralized procurement activities, and we can have shared services model. It's very popular, as you all know, for multinational organizations where they can have shared services at a place where it is cheaper to process. They can have a shared services model. And central, let us go one by one. Central procurement. In a central procurement, where all the procurement activities or sourcing activities will be carried out at a central place. It can be for any logistic reasons or any finance factors, economic reason, or the business policy. So the central procurement is, in terms of fusion, is you can, when you are going to create a business unit and assign the business unit function, we don't need to attach any ledger and legal entity. System will not force to select or attach any ledger or legal entity. I got a screenshot later so that I can explain better, you can understand. The central procurement unit is for any business economic reason or procurement reason for logistics or whatever. If client needs central procurement activities or central sourcing activities, we have to create a business unit called whatever the name you want, client name, XX, central procurement activity, central procurement business unit, where we have to attach only procurement business functions so that we can have a procurement activities under this business unit. In this case, we don't need to attach the ledger and legal entity. It means system will not create any intercompany transactions. There is no need for any financial transactions. I'll explain a little bit later. And decentralized. In a decentralized, if you have a couple of business units, we don't need any new configurations or the way we work. It will work as it is. Each and every business unit will perform their own function, whether it's a requisition, sourcing, procurement, invoice, or payment. It is as it is, easy to understand. You don't need to do anything new. And shared services is very popular for multinational organizations. Client prefers to have a place, shared service place, where it is cheaper to process their transactions, a business unit or a BPO, business process outsourcing, whatever the name we call it as. It's easy to operate at cheaper cost. If you are going to have a shared services model, we have to create a business unit in terms of fusion, and we are forced to attach the legal entity and ledger, because the shared service will not only create a procurement function, will not only create a purchase order, or will have a procurement function, will also take care of all the processing, the payments, invoices and payments and everything. How it works in terms of fusion. The first option is, if it is a decentralized, say example, we have a 3 business unit, request, source and buy and pay, requisitions, sourcing and procurement, invoice and payment function will be a decentralized. We don't need to do anything new. If you have a 3 business unit, configure 3 business unit and create a business unit function for all the 3 business unit and perform as it is. Second option is central sourcing and legal executions. If there is a central sourcing, say example the same, we have a 3 business unit, and the business unit 1 and 2 will request, and we will create a third business unit as a shared services model. In a sourcing, it will act as a central sourcing, but procurement and pay will be done by respective business unit of BU1 and BU2. And if it is a complete shared services, what will happen is, complete shared services means the financial transactions involved, where invoice and payments are involved, the financial transactions involved, In this case, we need a ledger and legal entity. In this case, if business unit 1 and 2 is a request for any goods to be purchased, requisition rights the requisitions, and sourcing and procurement is going to be carried out by shared services model. In this case, what will happen is shared services will create an invoice and payment on behalf of BU1 and BU2. In this scenario, intercompany transaction is inevitable. System will create intercompany transactions. It will create a lot of wanted or unwanted intercompany transactions. So care must be taken before we get into conclusions. It depends on our service delivery model, how client wants to have a future service delivery model. And the last one is where we can have a separate procurement, invoicing, and service provider kind of relationship. Business unit 1 will request, and it will be sourced by shared services, and it will be paid by business unit 2, where it will be automatically system will create a financial transactions. So there are 4 options, but technically it's only 3 options. We can have centralized, decentralized, or we can have a shared services model. Now, if it is a central procurement, as you see in the screenshot, we create a business unit. And the business unit, when you are going to assign the business unit functions based on your offerings, what you are going to configure. Say, example, if you are going to configure only procurement, payables, and receivables, accordingly you will select the offerings, and accordingly you will have an implementation project will have all these offerings. When you are going to select only procurement function, as you see in the screenshot, if you see right side, there is no primary ledger and legal entity primary ledger and legal entity are not mandatory. System will allow you to create as a central procurement, where in this scenario, if you go back to your previous screenshot, where request organization will request for any goods to be purchased, and the central procurement, where we are going to configure central procurement, will only create a procurement functionality, will create a purchase order, and system will create a purchase order against the requisition business unit, and the invoice will be done by business unit 1. To make it very clear to fusion functionality, what happens is we have a 3 business unit, BU1, BU2, BU3. In this case, BU1 and BU3 are requisition business unit. BU2 is centralized procurement, where we have created a central procurement business unit 2 and not attaching any ledger or legal entity. In this scenario, how it works is, if you create a requisition in BU1, when you go to create a purchase order will be created in BU2. That is a central procurement. The accounting will be copied from your requisition business unit. There is no financial transaction involved in centralized procurement, no chart of account because you have not attached any ledger. So no chart of account, so no accounting is possible. It means it will copy from requisition business unit 1, and it will create the order, because when you are going to create the requisitions, all the accounting transactions, all the categories, all the catalogs, all the price and tax, everything will be there. It will be copied to your centralized procurement. Once a purchase order has been created, when you are going to create an invoice against the purchase order, automatically invoice will be created in BU1. So in this sense, central procurement business unit will work only as a centralized place to create all the purchase orders, in this case, for example. Let us move to shared services model. It is exactly like creating one more business unit. It works, it's easy to understand. It works the same way how each and every business unit works. Example, the same example. If you have 3 business units, BU1, BU2, BU3, create a one more business unit called BU4 and keep that as shared services. Or stick to the old example, keep BU2 as a shared services. In this case, we will assign all these functionalities, all this business function. If you see that sooner you select the payables and the payment, the mandatory mark is appearing, meaning we have to attach the ledger and legal entity. What happens is, in this case, create a requisition in BU1, And in BU2, system will create a accounting and tax calculations, and everything is based on the configuration that the ledger and legal entity has. And then system will process. In this scenario, because you have got a chart of accounts and ledger, system will create intercompany transactions between BU1 and BU2. And invoice will be processed in BU2 and payment will be processed in BU2, as you have seen. It is purely working as a shared services model. Example, you have got a shared services in China or India. Requisition will be done in UK or US. It will be processed and purchase order will be done, carried out as shared services. Invoice will be created, payment will be processed. And intercompany, since the system is going to create intercompany transactions, you are going to have clear trial balance or P&L and profit and loss account. And you can have your own markup, depends on the client requirement, and how you are going to deal with that. And the final slide is we are going to see